Hello, everyone. Very warm welcome to all the attendees present here and to our hosts for the day. I won't waste much time. We'll just quickly give a brief idea about the agenda for today and a brief introduction about the speaker himself. Today, we are going to talk about financial frauds and the role of internal controls in preventing frauds. And here we have Manish Kaushik with over 13 years of experience. He is an experienced advisory manager with a demonstrated history of working in management consulting industry. He is skilled in enterprise risk management and financial analysis, and is currently working as a director at KPMG India. Welcome, Manish. I shall be sharing my screen and would like to hand over the session to you.
Thanks a lot, Aditi, and welcome everyone. Thanks for taking out time. Before we start, as Aditi said, I'm going to introduce myself very briefly. I'm Manish Kaushik. I am a director with the firm. I've been working with the firm for about 11 years now. It's kind of close to the entire career that I have. Previous to the firm, I was with HSBC Bank in New York, and been I've been working with the firm in CFO advisory for last 11 years, taking out for technical advisory with respect to accounting, mergers, acquisitions, IPO listing, fundraising, as well as helping our clients moving from one international gap to another other ones. And when India moved to IFRS, I think that's when we had the most work in that sense. So that's brief about me. I am a chartered accountant by profession and a bachelor in computer applications as well. So that's a combo that I have. With respect to what we're going to cover today, as Aditi kind of mentioned, is around financial fraud and how internal controls are useful with respect to preventing that fraud. Now, before we begin the session, I would like to kind of set some ground rules for the session. I think unless and until you guys interact and ask questions, it's for your own benefit. The most you will learn is by discussing and interacting with respect to the topics we are going to cover. So I would urge all of you to be as interactive. Raise questions. All what you need to do is raise questions and discuss. Rest of it is on me to make sure that we have enough discussions around those topics so that you understand them in depth. So I'm going to start by just saying that there are few words on the screen, and before we jump onto the slides, I would like to know what all of you generally understand when we say the word fraud. So you can type in and we can quickly have a look at those. What's the first word that comes to your mind when we say fraud? Okay, we got nothing in the knowledge of management. We have money laundering. What else? Unethical, manipulation, personal gain, cheating, illegal, misappropriation, misrepresentation, fantastic, doing something malicious to get monetary gain. Okay, very good. Embezzlement of cash, yes. Okay, so I think all of us have a fair understanding of what cheat fund companies doubling money. I mean this team leading. Okay, very good. I think we can discuss these in our Q&A session as well. Some of these are very unique and worth discussing as well when we take the Q&A at the end of it. So as of now, I think we all, as I said, I think we all have a fair understanding of what a fraud sounds like and what we have heard generally. I think some of you kind of did talk about with respect to monetary gains. I think the as a base, we all understand that if someone is gaining something in an, as someone also mentioned, in an unethical manner, it is something that we can call as fraud. Okay. Now there are various types of frauds actually, but I think what we're going to focus on is financial fraud. I think when we say financial fraud, it just doesn't mean that it is just money that we are talking about. Okay, I think that's the basic we need to understand that it's not just the cash that is financial only. It can be property as well. It can be anything with respect to which has monetary value to it. That is financial. Insider trading is obviously not allowed, but it is not directly a fraud as such. We will come to that. I will explain some of these differences as well. With respect to, as I was saying, with respect to financial frauds, can so it is basically not just cash or not just money. It can be anything else that has value attached to it as well. It can be a financial fraud. Now, do you think frauds or financial frauds specifically are only with respect to personal front? So say for example, I have a couple of friends, not just friends, I'll say. So say for example, I'll give you an example. Say Manish Kaushik tells someone that I can double your money in like 5 days. Okay, I take their money and I run away. Like one of you said that doubling money and cheat fund entities, right? Or say for example, I have an entity which I have incorporated wherein I am the equity shareholder, or the single alone equity shareholder of 100%, and I take money from that entity and buy something for myself. Okay. Now, which do you think, both of them are financial frauds or both of them differ in some way? I'll repeat myself. There are two set of scenarios. One is where Manish went ahead and solicited, say for example, 10 people and asked for their money and said that I'm going to double it in 5 days. I have lots of schemes, and I just took their money and ran away with it. Another one is Manish kind of incorporated an entity, ran a business through that entity, but used that money that I generated from the entity, because I am the whole and soul of that entity, 100% owner, and I used it for my personal purchases. So Pratham says both are financial frauds. Okay. Anyone else who has a different view? Both are frauds. Yes, definitely both are frauds. Simran says first is a financial fraud. They both seem to be different. Yes. Just the first one is fraudulent. Okay. Any other views? Actually, this is exactly what I wanted to hear. First one is, second one seems to be different. Second is misappropriation of funds. Okay. Okay, Bharat says second one is misappropriation of funds. I'll wait for like 10 seconds more before rest of you are able to respond or think there is another answer to this. You don't have to see what someone else may have responded. Whatever you feel, you can respond. Okay. So both of them are frauds. Okay. Now, both of them are financial frauds as well, because it involves money or some other form of money. Now, how both are different is and that's where I think the difference lies, and that's where the first one is a pure play cheating as well. So I represented myself as Manish Kaushik. I went to ask for money. I went to ask for people's money, took that money, misrepresented myself or misrepresented the facts that were related to me, the outcome that I could have created for them. And that is how I was able to gain their money. Okay, that's the first kind of fraud. What we are going to cover, and why we accountants, what we need to know, and how these frauds with respect to entities occur. Okay, why it is important and why I gave this example is, when we have an entity, it is a separate legal entity. Okay, but entity in itself cannot run, right? It's still a non-touchable, it's still an invisible thing. It cannot conduct business on its own. It needs people to run it for it, right? But even though I am the whole and sole equity owner of the entity is still a separate legal entity. I, as Manish Kaushik, cannot use entity's money. And that is why the second one is also a financial fraud. But the nature is different. And our focus and the way and what we are going to learn and think about and see how internal controls can help will be the second part of it, where there is an entity involved and there are people who are running the entity or have authorization or power of some sort in their hands. When they misuse that power or when they neglect something as well, okay, then there is a fraud that happens. And that is what we're going to cover as part of our lab. Is that clear to everyone? Do we understand? Yes, absolutely. Absolutely. The corporate wheel is what we need to lift. And only then we understand how it isn't actually a fraud. So is everyone clear? I think it is clear to Pratham that I can see. If anyone has any doubts or if they still don't understand, I can repeat it. Because that's the essence. That is very important to understand how these frauds are natured and why do we need to understand there is an entity which we are talking about. So if anyone hasn't understood, can just say no. And if there is a no coming up in like 10 seconds, I'll repeat. Okay then. Very good. Good group that we have. So now that we understand how various frauds are different in nature. Okay. Now what we need to understand going forward is, and there is a differentiation and a definition on the screen as well. Now, what definition generally says is it may be an intentional or an unintentional act as well. Okay. Where we may use various items. It can be just a lack of knowledge as well. It can be deception, but we use it to gain an unfair advantage. Okay. Now that is what we term, and it should be, there should be a value attached to it for we calling it actually a fraud. Now, there are different types of frauds that we have discussed in entities as well. Now that we have understood that, and we're going to focus on the frauds that involve entities. Now, can someone tell me how a private entity and a public entities, people who are responsible, and how those are different with respect to those frauds that may happen with them? Anyone can give a rough guess, then we can. I'll repeat the question. With this, now that we have come to a conclusion that entities are the ones where we need to focus our discussion for today. How are private and public attack different with respect to frauds that can happen? Okay, I'll give it. I'll tell you. So private companies by nature are controlled by a few individuals. Absolutely, Jyoti. Absolutely. So that's what I was coming to, Jyoti. That for a private entity, it is a very few individuals who control the entity. Okay. Now, the money involved is also from those people only. They are the equity shareholders. Now, for a private entity, the fraud can be in a manner wherein these people who actually control the entity uses the entity and gain unfair advantage from the third world or the third parties. How does that happen? So say, for example, I'll take all examples on me. So say Manish Kaushik wants, say, 10 crore loan. Okay. Now that cannot happen just on my network. Okay. Now what I do is, okay, I decide, boss, I'll float a private entity. I float a private entity. I I forge a few of the invoices. I get into, fake entities, and I get a number which is substantial enough for banks to allow me a loan to that entity. Okay. Now, a private limited entity with those people who control it, in this example, Manish and his friends, say, for example, uses that entity they have incorporated, that goes to the market and uses deception or forged documents or a picture which is not absolutely correct and gain unfair advantage from third parties. And the example that I took is the bank that I am gaining advantage from. I take those funds, utilize those funds, and run away. So that's a private entity which generally uses and which is used to have third parties done fraud with. Now, for a public entity, the picture is not exactly the same. Okay, for a public entity, what happens in a public entity is there are investors who invest money. Okay, investors can invest in a private entity as well, but all of those are short-lived. All of those investors are short in number and they generally own the entity. Now, when we talk about a public entity, it means their share is traded at the stock exchange. Those shareholders may be sitting all across the world. Okay, for them it is difficult to collude and then do something. But the important part is the entity is run by different people and the money invested is from different people. And that is why the interests of those investors is at stake. Then the fraud that generally takes place is the people who are in charge of the day-to-day operations or have the power to run the entity uses their position to fraud the investors of the entity and take their money and use it for their personal gains. So this is how obviously a public entity may enter into a fraudulent contract with third party as well. But generally and essentially, when we talk about fraud, it is when investors' money is used by people who are in position or who are in power. So that's how a public entity uses or a public entity's money is used for a fraud case. Is that clear to all of us now with respect to how a private and a public entities are different? Yes, Imran. I think that's yes, it is clear. I think Imran, you will get a recorded link. Yes, but I can repeat Imran as well. Or you may have to study a bit as well with respect to what a private company and a public company are in their essence, and then maybe it will make more sense to you. Okay, I'm getting a few yeses as well. Public company is the fraud through those charged with governance. Absolutely. So when I said this is Deepika. So Deepika, you're absolutely correct. People who are in power, or when you say in governance, is exactly it means that they are the ones who generally collude and get some fraud going because they are the people who are there with respect to the power in position. But there are other people who can commit fraud in public entities. We will look for some examples as well, and we will use them in our discussion. But generally, with respect to a private versus public, these are the people who get into it. Okay, so I wouldn't say that any company made big fraud example while auditing by KPMG. So I wouldn't. I think you thankfully you wrote KMPG, not KPMG. Yes, Satyam was one of the cases. Okay, I'm kind of rushing with the notes. What are the questions that we have, sir? In public company, is the fraud through those charged with governance? Yes, I think it will be difficult for an audit committee to commit a fraud as such, Deepika, because audit committee is a committee that actually puts those controls in place, the internal controls that we are going to talk about. Committee is one of those committees that are put there as internal control so that these frauds don't take place. So it's going to be a tough scenario for an audit committee to indulge into it, because generally audit committee is comprised of people who are external to the entity and generally don't have any governing power to run the entity. Does that answer your question? Okay, hopefully yes. Now the next, I think yes. I think I'll go to Imran's questions. Or I think Imran, there are companies who may have done frauds, small, big ones, but audit is just one part of it. It is not something that auditor is the only agency or the entity which can stop frauds from happening. Fraud is a very difficult scenario or an event that can be prevented. Now we need to prevent frauds rather than report them. Auditor generally is only looking at the financials or the transactions once they have happened. They may or may not be frauds in audited financial statements as well. Many cyber cases, money fraud is happening. Oh, absolutely, absolutely. I think all of those are like the example that I gave as a first example between Manish Kaushik and the entity that Manish floated. So those are the ones with the cyber cases money, where if you see how people nowadays are, just calling that there is this web series along with it as well. With, I think, with the name of Jamata, where like people call others and say that I'm stuck here, or this is the QR code. So it evolves, right? So frauds have been happening since ages. Since the discovery of money itself, people have used deception or unethical ways to gain access to others' money. And it has continued. The modus operandi keeps changing, right? Bharat Pay wasn't a complete fraud, Ajay. But it was used like that. It wasn't just the Bharat Pay who was a fraud. Okay, so there are some of the examples as well with respect to reporting. Now, so when we are saying that there are fraudulent financial reporting, it means the entity which is reporting the numbers is not reporting the correct numbers in their correct sense of what they are, their balance sheet position, or their financial health is. They are either increasing the expenses, they are either decreasing the expenses, or they're kind of, looking to increase the revenue, decrease the revenue, or changing some of the balance sheet items to help them a particular scenario. It may be a case wherein they are looking to have a very substantial loan from a bank. For that, they need a very, very strong profit and loss or revenue in that sense. So they may inflate their numbers in that sense. Exactly, exaggerated scales also. But there can be scenarios where the entity is looking to decrease the sales as well, and that also is a fraud. Can you tell me why an entity would like to decrease its sales? Everyone can, like most of you, would give an example of increased sales. But if someone can help me a scenario why entity would decrease its sales, and it's still absolutely, Ganendra, it is with respect to tax generally. Absolutely, absolutely right. I think I will clap for the people who answered. Well done. So entities who are looking to reduce their sales is on account of taking an advantage with respect to taxes. So what they're going to pay is less taxes today. Okay. So that is also one of the frauds only. Even decreasing is absolutely. Even if you, I think generally, I think who said for the Achal. So Achal, with respect to next quarter, I think generally tax rates are similar quarter wise, but they may do it to defer it to the next years. Definitely. That is something that entities may plan, and that's what tax evasion or tax planning can be part of it. That they may decide to defer their tax payments to different years. And that also is a fraud. Absolutely, absolutely. So that are some of the examples. I think some of the examples you guys did, that is there on the screen as well. I think we have covered them as well. Planning may or may not be. There is a very thin line between tax evasion and tax planning. And maybe if you think about how tax every person plans for it, I think if it is within the ambit of the law, we call it planning. But the moment it goes outside the ambit of the law, we say it is evasion. But it's a very thin line between the two. Okay, am I missing any comments? Da, 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 da. So some of the examples we've already talked about with respect to inventory. Again, it's one of the ways we increase or decrease my balance sheet strength in that sense for that year. I think very, very, very important example with respect to entities is will come to your question, Srinivasan. When we say that, if you could tell me why capitalization. Yeah. I think we are coming to that, Pratham. That if you capitalize something that had to be expended, so if it had to be an expenditure, but you capitalized it, why would that be a fraud? Can anyone help me with that? I think Pratham also asked the same question. Do you think it is overstating the profit? Absolutely, absolutely, absolutely. I think everyone gets. I think we've got a good group of people who actually understand how my numbers move. Absolutely right. So Pratham, I think that's your answer. If I had to expense something off and now I'm capitalizing, I'm essentially reducing my expenses and I'm taking the hit of those expenses in future years and on a depreciated manner. Rather than giving that hit in 1 year, I am utilizing that opportunity to capitalize the same and using depreciation as an expense over a period of life or amortization in that sense. Absolutely. Absolutely. So it is, I think what they did was a wrong accounting policy. It can be a result of a wrong accounting policy or a mistake as well. Not every mistake is a fraud, but if you are doing it intentionally, okay, and it results in a specific gain to someone and a loss to someone else, it is a fraud. It may be just a wrong accounting policy also, and whether a wrong accounting policy or a wrong accounting treatment is a fraud or not, that is something, a point of question, when that has to be taken individually as a case. But what Byju's did was definitely a fraud in that sense. It's not just a wrong accounting policy. Okay. Anyone else has any doubts on the few of the examples that we have, whether they agree with whether they are fraud or not, or else we move to the next slide. I think we're already on time actually. Give you an example of okay. Unintended fraud would be, so say for example, I mean that will be too difficult one. So say for example, there is a transaction that you entered in Achal with your you purchased an item. Okay. Now you believe that this item should be expensed off, as your accounting policy. But given the new accounting standards that are there in the picture now, or which are applicable, that asset had to be capitalized. Okay, you couldn't have expensed it off in the same year. Now that is something, it is an unintended error in that sense. Okay. Now whether it translates it into a fraud and someone is kind of duped of some money and someone can actually call it as a fraud, that's a different thing. But it is, when you make an error, that's an unintended fraud. Okay. Generally, to call it a fraud, it should be intentional. But at the same time, even if you did something unintentionally, but if it is still an error and someone is out there who loses money because of the information you presented, okay, that still counts as fraud. Does that answer your question? So we have got some examples. I think we have discussed a few examples, but there are a few more on the screen just to see how misappropriation of assets can also result in fraud. It's kind of pretty straightforward, all of them. With respect to the fraud, I think the base formula remains the same, what we have discussed. There can be million types of frauds that are available or which can be done in the financial statements. So we're going to spend a couple of, say, less than a minute. Maybe you can just scroll through the screen, and if you believe that you don't understand one of it, we can have a quick round about it, else we'll move on. I think we should move on to the internal controls that are needed for the prevention of these frauds. Now, so frauds happen, right? Frauds happen, errors happen. There is a lot of things that take place when an entity is run from because the people who are at the helm of control, at the top of the entity, where, say for example, I am the director of the entity and I am responsible for a smooth functioning of the entity. I cannot, as personally, I don't think I can control everything that the entity does. So I personally may not be able to, stop every fraud. So what entities can do, because there are a lot of people to control, then we put processes into it. Okay. We put processes into my roles, responsibilities, and the way my entity functions or my company functions, so that there are like negligible or no chances of someone doing a misappropriation or using entities money or someone else's money for their own personal gain. Okay. Now all of those processes put together as such is generally what we call as internal controls. Okay. Now every entity, based upon their level of operations, their scope of operations, their in what countries they are, what kind of methodology you use, how many people are involved in it, will have different levels of internal control. Okay. Now, some of the entities may only have preventive controls in place. What do we mean by preventive? Or say, let's first take an example of a detective one. So some of the entities may only have detective controls. Okay. Some may have a corrective and some may have preventive as well. There may be a combination of all of them or one by one. Now, entities which are smaller, which are small in size, which have less money to spend, because the processes or putting in the processes and their design, implementation, and maintenance of the same also involves a cost around. Okay. So some of these entities may just have a detective control out. Okay. Now they may say that, like an audit, I gave you an example, right? That okay, may the fraud may have happened, but we are okay to only detect it later on. Okay. And put processes around it, that once I have detected the problem, then I put the corrective measures into place. Now, some of the entities may think otherwise, and they may feel that, okay, no, we need to prevent it as much as possible. So they may put processes into place to prevent the frauds itself. Okay. So internal controls is all the processes that are there to prevent such mishappenings, safeguarding the assets, applicable rules and regulations are followed. There is negligible or no chance of someone else utilizing someone else's money or gaining from the information that may have. So all of that put together are the internal controls. And again, various entities may utilize detective or preventive measures to actually control all of these frauds. But once they have detective, whatever processes they change or put into place as new processes are the corrective measures that they take. So that's the general internal controls for every aspect. Sorry, for every aspect of a change in internal control or every aspect of a fraud that happens, every case that happens, entity may put corrective measures in. If they can foresee what can happen, they may be able to put a preventive process to it. But if they can't, they will have to put detective and corrective one. Okay. Now, can you give me a few examples of internal controls? Generally the frauds that we discussed as examples, what controls you would put to them to prevent them or say correct them later on as well? Clear delineation and MIS. Okay, so I am assuming, Srinivasan, you mean that there should be a maker checker, like the responsibilities of who does what is absolutely clear. Fair enough. And when you say MIS, it means that proper reporting of the transactions that have happened so that someone can review them and can take preventive measures or corrective measures if needed. Yes, absolutely right, Pratham. I think authorization is very, very important. And I think someone else with respect to delegation as well. Delegation involves authorization as well. So yes, absolutely important. Absolutely, it helps. When different people have different authorization levels, it helps to control the quantum of that needs to be evaluated. We discussed a lot of examples of fraud. So for every fraud, there has to be one way to prevent it as well, no? Stopping insider trading. No one should leak their company secrets. Yes, Shibangi, absolutely right. And insider trading is kind of pretty company secrets. Obviously, there could be different to insider trading as well. But yes, absolutely right. We shouldn't share anything that is private to that entity. Whistleblower policies should be there. System controls is a very good, very, very good response, Srinivas, because I think systems control is important because most of it is not manual nowadays. It is driven through systems. So if we have proper systems that are there and controls associated with it, there is lesser chance of people able to gain advantage out of it. Absolutely right. And exception reporting is also fantastic answer. It is difficult. I think Ganendra, with respect to insider trading, it is very difficult. But at the same time, I think what we discussed about with respect to delegation and people who actually need to know that stuff, only they know it, they know about it, and information, educating them that how an insider trading happens, what they should be careful about, and how they should report. Absolutely, vigil mechanism is also part of it, how they should report it, and how they should be keeping that information to themselves, and how that impacts the company if that information goes out, what they're talking about, and how it impacts them as well. Some of the people don't even know what can be the repercussions of an insider trading, right? So those education, those trainings, if you see, public entities put a lot of focus on putting or imparting trainings to their employees, especially finance employees who understand numbers, who are closer to the numbers for these insider tradings. So training, putting these policies in place, telling them a proper procedure of how to report these things, and making them understand how it impacts the entity as well as themselves as individually. Because ratios also, absolutely, this is a mechanism with respect to MIS itself. When you prepare MIS, when you have various information management reports that are available, you review them and you see and look for exceptions, as you also mentioned. You look for abnormalities, you look for exceptions, and then you see what are the reasons behind those exceptions. Absolutely. Then we've got a good sense of what these examples should be, and that is basically the examples what we could have. I think we as a group have kind of surpassed way better than what is there on the screen. So that's kudos to us and mainly to you guys. So we got, I think we have a case study which we built on Enron as such. I think some of you already talked about Satyam and some of the other scams. Enron, Arthur, was a very old, but it kind of shook the entire industry with respect to accounting and audit as well. So I think that is something that we have. Primarily, that happened with Enron and Arthur was that the new CFO that was appointed for this entity utilized a lot of his personal connections as off-balance sheet partnerships, and he siphoned a lot of money. And also, they used what we call as mark-to-market technique, wherein we say that whatever gains are there, they kind of pulled their gains, unrealized gains, what we call, and put them in their current P&L, so that their current profits are inflated. And in addition to that, as I said, they had a lot of off-balance sheet partnership. They siphoned off money where money was actually not there. And auditors also kind of were part of it. And Arthur Anderson, which was the audit entity with them, they kind of all were there, and it was a huge shock to the entire financial hub, or I say the fraternity in that sense. A lot of these people went to jail as well for their frauds that they had committed. After this only, I think the biggest change that happened was with respect to internal controls and the strictness of the same for the listed entities, and then what they were called Sarbanes-Oxley, which we call SOX now. There are various versions of it as well. Indian Companies Act itself is a more stringent and a stricter version of SOX itself. That also is a commendable act with respect to Indian governance, which kind of runs this show. They did a fantastic job with Companies Act. It is few steps ahead of SOX, but the SOX was the ask at that time, and And a lot of frauds have happened. But if you generally see, most of these policies and things that come out of picture are after a fraud has happened. Most of them are able to put only corrective measures rather than preventive. So there are a lot of scams that have happened. Some of you also mentioned there was a very good, if you are like keen to read, there was a fraud with respect to the LIBOR itself, wherein yes, absolutely, SEBI came after. SEBI as an entity itself after came into effect after that scam. It was there. SEBI was there to some extent in different forms. It wasn't called SEBI, but yes, in its full force, it is still yet to come. But I think Companies Act, when it came in, I think is a very good step with respect to governing Indian entities which are listed. I was saying with respect to LIBOR, when Bank of England itself kind of rigged the LIBOR with the colluding with some of the really big banks. I think you should read about that as well, which hit the UK and the US entities a lot. I think few years back. So that also is, and what RBS did was also something you can read through with respect to how the balance sheets were inflated, and actually they had nothing while they reported they were the strong, or like one of the strongest banks. So that they were hit by 45 billion kind of loss right away, like the 45 billion of net worth wiped off. Yes, Lehman Brothers again was a very good example. So there are millions, like as I said, since the inception of money itself, frauds have been happening, and I would kind of put myself on the line and say they will keep happening, because people will keep thinking about new ways to the modus operandis will keep changing. But I think as accountants and regulators who are there, their first job is to see how they can prevent something. And if not prevent, definitely once one's case has happened, they should be able to detect it and then put corrective measures. And that is why we as accountants should be able to contribute for the entities that we are working for. Achal, that's a very kind of, a question that, so in my personal opinion, I would say, I would say, I wouldn't say that a very huge percent of them are, doing frauds. Fraud is something very, very serious in that sense. They may be trying to see how they can get more business. I think that era has also passed. Initially when startups started, I think everyone was running towards the top line, the revenues only. They did a lot of efforts around just looking at revenues only. Now that wasn't fraud in that sense, but some of them used different techniques, and at that time, given the accounting standard that was there, they used those as well to see how their top line can be increased. But I don't think I have a percentage in my head like that to say that what percentage would be doing frauds. But I'm sure all of them are under pressure and will always be under pressure to perform. And then that's the beauty of startups as well. Okay, so that kind of brings us to the end of what we wanted to discuss with respect to frauds and internal controls. Though we have been discussing questions while on the go as well, but I'm happy to take others as well. Aditi, all of it is what I explained with respect to Enron. So you can keep. I think we are done with this. Yeah. So if you have any more questions for me with respect to what we have discussed, or with respect to the course itself, or something else, we're happy to. Frequently, KPMG conducts these type of programs. So when you say these type of programs, is it just this one with respect to fraud, what we discussed for last an hour or so, or the program that we are running as Masters? It is pretty frequent. We are running this with Masters Union, and we do it pretty frequently. Ask you one thing: what's the scope of FRM? Should go for it. Absolutely, yeah. Why not? I think with respect to scope, I think given the change, given the speed at which we are changing with respect to finance, I think everything is in great demand. There is nothing that I can think of where there is no demand about, including FRM, as you said. Absolutely, man. Absolutely, you should go for it. Whatever you do, whatever you pick up, I think do it in depth. Do it in depth. Have an absolute masterclass on it. Be absolutely sure what you are doing. And I think you will. Everything has very good scope. I don't see anything that is struggling as of now as in finance, especially. How do fund managers get info? Tough. I think fund managers also they keep asking for these regular reports from the investee entities. They keep looking at the audit reports. Obviously they have to rely upon various entities like auditors, the due diligence that they keep on doing on those entities, various reports that they keep asking, and then reconciling their own reviews and the discussions with directors itself. So that's how they keep an eye on it. There is a concept of forensics audit as well nowadays. Whenever not just the fund managers, anyone who has enough share or enough investment in that entity can look for a forensics audit. KPMG also does the same. And then the entire entity is run across a forensics audit, a frauds audit in that sense. And then you try and look for these areas where frauds might have happened. So there is a specific audit for that as well. What led me to finance? Okay. I mean, that's a long story. I'll cut it short. I had science till graduation. I had started my physics honors, but then my dad had an idea to tell me that I should do CA and then accounting. So that's to my dad, actually. Thank you for joining as well. Are you classify industry specific frauds? I think the question I'm not clear, Srinivasa. Are you saying can we classify industry specific frauds? If yeah, okay. I think absolutely. So there would be industries wherein obviously, because even for a fraud to happen, there has to be some basics that are needed. So there would be a means to it when you can actually plan and to do that fraud. That would be specific to those industries. Yes, absolutely. See a necessity to get into forensics auditing? Absolutely not. But with respect to financial, not just CA, I would say it's not just CA, but to actually understand financial statements and to go for because forensics audit is not only with respect to financial statements only. Okay. It is a lot of other things as well. So say, for example, procurement, when you go for procurement, there may be a fraud there as well, wherein assuming I'm the procurement manager, I ask for 3 quotes, but all of those quotes are my own entities, then that is also a fraud, right? For that, you don't need to be a CA, you don't need to do that. But for financial statements fraud and items which are very, very specific to those, yes, you may need some sort of financial knowledge for that. Yes. So I have failed. Is it preferred in the masters? Absolutely. And I think you should keep focusing on what you're studying as well. It is a tough course. There is no doubt about it. There is a lot of variables that get into someone passing the course as well. Keep doing the hard work, and you should try and do the masters as well, so that it helps you understand some of the concepts as well. Okay, I also after completing was guy in 3 years ago started for CA studies. Good, Jyoti. I didn't complete. I completed my graduation in computers actually. And by that time I was in CAP2 as well. So long time back. The course will help us do fraud or prevent fraud. I hope you don't use it to do fraud, but to prevent and correct. Or obviously it's up to you how to utilize it. Roadmap to become an investment banker. Investment banker is very different field to what we are as of now. I think it's the MBAs and other things that you may have to think about and go for them to be an investment banker as such. It has nothing to do with fraud or non-fraud or preventive fraud, and it's an absolutely different field, Ganesh. Okay, we are at 8:02. Maybe we'll take a couple more minutes for you guys to ask questions. Thank you, everyone. And you're welcome to question us later as well if you have more questions. Any specific certification other than MBA in finance? There are a few with respect to if specifically you're talking about an investment banking, there are a few work in financial company. I think there is a basic requirement of you should have a graduation, whether if you have a higher degree in finance, that works. If not, then there are various courses available like ours itself, which you can join, that should help you get into a financial entity. I mean, do you get a certificate? That I will let Manisha or Aditi or Nandita answer. Manisha, do we get a certificate? Can you suggest the tips to crack interviews in Big Four? I think there will be a session. I think in a masterclass there is a session where you help you with how to present, how to go about interviews and how to prepare for them and other things. Yes, Deepika. And there will be some tips in there. Yes. Is any placement in other countries? If your question is with respect to this class, that a placement in other countries itself, yeah, Aditi, you're there. Aditi, do we get a certificate?
About the course, then definitely it's a certificate program. You do get a certificate towards the end of like 12 months, which is the duration of the course. But I'm not sure about the particular masterclass if you're mentioning that.
Okay. Harini, that I hope that answers your question. Can you suggest the tips? Is there placement? So in the placements that we are offering, Aditi, is there, I don't think that the placements are other than India, right? FRM or CFO, both are good, yeah.
So it's not that like it's a huge pool of opportunities abroad, but
okay. Cool, Harini, thanks. We'll be waiting for that session. Okay, Shivangi, there will be a time. Okay. So Aditi has shared a link with all of you. Go to that, read about the MasterCamp. So again, I think should we close, Aditi?
yeah, sure. All the
Go
questions
on.
I feel have been answered. We can close it.
Cool.
Definitely.
So I'll say thank you very much, everyone, and a fantastic group to have. I think you all were very, very interactive, and thank you for your time again.